So we are at understanding risk and trade management. So when it comes to risk, a lot of people, when they teach risk management, they talk about risks to reward 1:1, 1:2, 1:1.5, and all. But risk in its own self is not limited to the trade. When you want to risk, what exactly are you risking? Are you risking your money? Are you risking your entire life savings? So before you take any decision in taking risk, especially on a trade, you need to understand. And then when you understand risk, you can also understand what we call hedging risk. It's a place where you have to have a hedge against your risk that you're taking. I don't call the risk we take on our trade risk management, because I feel if you really want to manage your risk, you have to be in a hedged position. So that what do you call a hedge? So let's say you have, let me put it in very simple terms now. Let's say you have a job and you have forex trading, right? Now forex trading can be a career for you, but maybe because you are not so sound in forex trading, you don't leave your job. At that particular point in time, you're using your job as a hedge against your forex trading career. So if, because you are not very proficient in trading, your trading career doesn't go well, you can always fall back on your job. Do you understand? That's simple terms. Then in trading terms, what most people do is, because the currency market does the opposite of what the stock market does. So if the currency is going down, like as naira has been going down for some time, look at the history of the stock market for the past 3 to 4 years. It's been doing marvelously well. So you can now say, okay, you are taking a currency position here, you also take your stock position over there, so that if the currency is not doing well, your stock is going up and you're adding your money. So in trading forex, we have what we call options and futures trade. So if you're trading euro USD and then your euro is going up, and let's say you probably had bought USD and then euro is going up, you can go to the other side and buy euro for the time euro goes up. Maybe let's say euro goes up for 2 to 3 days, you can go and buy positions of options in you can buy options of euro in the options market. So even while your currency is reading a loss, you are getting your hedge, you're getting profits from your options positions. So that is what I call risk and risk management. I don't call putting stop loss, taking profit as risk management. What I call it is trade management. So now, for this particular course, I'm going to talk about trade management, because risk management is for people whom will actually go further with me. So this course is for people who just want to understand exactly the thought process, and then who really want to understand more about forex. So even if you don't take my course, no problem, just understand these things and understand them well. So what is leverage? Leverage is something you stand on. So or something you can I won't call it fall back on. It's something that gives you an edge. So if someone is let's put two people now, right? One is born with a silver spoon and one is not born with a silver spoon, what we call wealth. So a child who is born into wealth has a leverage, has an advantage over somebody who is not born into wealth, meaning that this person has large money, has large resources, has good network that is backing him, while this other person will have to struggle for everything. So typical case in Nigeria scenario now, the two musical goats that we have, Davido and Wizkid, because those ones, their fans are always fighting. So people always say that Davido is where he is now is as big as he is because of the leverage he has. And what is the leverage? His father's money. So his father's connection. So when I listened to the story of Davido, it was obvious that yes, his father at the point was his manager. So you can imagine your father being a billionaire and then negotiating with people who know he's a billionaire. They will not give you, they can't undercut you, because in fact, in one of the interviews, Davido said that the father told the brand that, see, this money you want to give this boy, I can give it to him, so up your game. So that is what the leverage does for you. So in forex, what most brokers do is they give you leverage. So most times you see 1:100, 1:1000, some even go as outrageous as 1:5000. So what it means is, any money you put there, so let us say you put $100 and you have 1:100 leverage. What it means is that your $100, it is multiplied by 100. So you can take the position of somebody who has $10,000 already. Now the thing there is, should you use this leverage as a beginner? My answer is no. Still trade as if you just only have $100. Don't trade as somebody who has $10,000. Don't trade the multiple. The only time you can trade the multiple is if you've stayed for years in the forex market and you already see a position where you can use your leverage, because not every position you can use your leverage. So let me give an example now. During the Russia-Ukraine war, it was known that if this war should start, if Russia should invade Ukraine, that the euro was going to drop. That one, everybody who understands forex, who understands the role of geopolitical decisions in currency trading, know that if that happened, there was going to be a drop in euro. Now in that kind of a case, you can now use your leverage. You can now decide to trade like somebody who has $1,000, not $10,000, so that you don't kill yourself. So you now start trading as somebody who has $1,000 or who has $5,000. If you really want to use risk so much of your money. But if you take those kind of positions, you'll be able, especially with your $100, as small as it is, you'll be able to build a very huge profit from it, because you are now taking a long-term position. That is the only time I feel you can use leverage and use it to your advantage. So this is how it is done. Now the disadvantage with using leverage, if you don't know how to use leverage and you now take the opposite. So let's say you now trade like somebody who really has $10,000 on a $100 account. If the thing goes against you, it will take less than 30 minutes to wipe you out. Like when I mean wipe you out, you have what we call margin call. The thing is going to wipe you out. You will not have 1 naira anymore, or $1. Let me use the word we use to trade here. You don't have $1 at all in your account. You become broke again. So in as much as there is leverage, you must not always use it. You should learn when to use it. So same with lot sizes. When I was taking a risk management course and a trade management course some 2 years back, because it's risk management that it was called, because it was a trading channel that offered it. During the course, I now realized that for every $1,000, you shouldn't trade more than 0.01 in lot sizes. And 0.01 in Euro USD, which is the most popular traded currency, is I think that should be 10 cents per pip move. So it's 10 cents per pip. So if you're able to understand lot sizes, most of the time you won't lose your money, especially if you're being conservative and trading like somebody who doesn't you have leverage. That is one of the things you should do. Just trade like someone who doesn't have leverage. So if you're able to do that, you'll find out that you'll be able to last longer than most people. You will not be among the 90% of traders who lose 90% of their account in the first 90 days. So you might just be in a campaign, you already go out from the popular metrics. You are now, once you're able to break that, even if you're able to last 5 years, 1 year, 5 months, 1 year, you have broken out of that statistics. But the goal here is, if you're able to understand leverage and understand lot sizes, you can stay as much as a year. And the trick there is, the more you use the more you have money in your account, the more the chances you have of making money. But if you don't use your lots, if you don't understand lot sizes, right, and you don't use it well, and you don't use your leverage well, you'll be part of the statistics. You'll be part of the 90% that lose 90% of their capital in 90 days. I like how the thing rhymes. But as they taking out the rhyme out of it, it really happens. It has happened to me. It happened to me when I was learning. And it's still happening to a lot of traders despite their years of experience. So, and then once you understand lot sizes, how to use it is very easy. I've told you, you know when to use the lot sizes as if you do not have leverage, and then know how to use the lot sizes when you need to use the leverage. So when there are opportunities for you to use leverage with very good reasons, you can now use your lot, you can now increase your lot size. And then if you've been having losing streaks, you should also reduce your lot sizes. Don't go and martingale, especially if you're a new trader. Don't go and be increasing your lot size for everyone you lose. No, you're not in the game of trying to recover money. You're in the game of trying to build a consistent account to be able to accumulate money for yourself. So that is how to use lot sizes. Then what most people talk about, especially with the return risk to reward, basically I'll tell you to use as a beginner 1:1. What I advise is 100p stop loss, 100p take profit as a beginner. If you're able to do that, fine, you're going to make money long term, and you're going to understand a lot of things. So for stop losses and take profit, as a beginner, you need to learn how to use those things. Personally, I don't follow me. I'm just saying this here so that you take it. My style of trading doesn't require me to use stop losses, and it doesn't require me to take profit, because I could stay in the market for 3 to 4 months in one particular position. So for me, I don't really need stop losses. The only time I can do stop losses is okay when I know I'm leaving the computer and there's maybe going to be news, and I can now bring my stop loss into the profit zone. So that way you are not afraid of losing money. So if you have stop losses and you have a take profit target, it's still going to help you in analyzing. It's going to help to build your confidence in trading. So if you are able to just use them, always use them, especially as now most of the prop firms are actually saying you must have a stop loss and have a take profit. You should learn it. It's very important. And if you're able to have good stop losses, if things turn bad against you, you are not going to suffer. You're not going to lose your account. Then the advantages of break even. A lot of people I've heard and I've seen and I've watched a lot of people say breaking even is waste of time. The goal of many traders, especially the expectants, or let's say the expectations, the expectations of many good traders is to see people who are learning from them at least break even in their first year. But nobody is looking for you to make money, right? You can make money, added advantage, but if you're able to take break even, once your trade moves in your direction for some pips, you can now take your stop loss from being in negative to being in the positive. So that way, no matter what happens, whether the trade closes, whether you are there or not, you are going to make your money and you take your money out of the market. So if you are able to understand these things I've said, trading is not going to be so hard for you. If you don't understand, there is still a course where I simplified all these things, simplified them for you to come and understand and be good traders. That is the real goal here. That is why this site and this academy was created in the first place, to have people understand trading and understand it very well.